Hello and welcome to the London South East Greatland Gold Town Hall meeting. We're joined live by the Greatland Gold MD Shaun with an audience of many hundreds of Greatland Gold followers. For those of you who don't know me, I'm Donald Leggett, Head of Investor Relations at London South East, and I'm your host today. By way of background, a very brief background, Havieron was discovered by Greatland Gold in 2018 and is one of the most exciting gold copper mines in development worldwide. As you know, the project is currently in development under a joint venture with Newcrest Mining, Australia's largest gold producer. The plan for today is that Shaun will talk to slides for 15 to 20 minutes and give you a strategy update. And I think he might just have slipped out an RNS announcement for you to think about, with the rest of the hour allocated to your questions. And there we go. That's enough from me. You don't want to hear from me. Time to hear from the man himself. Welcome to London, Shaun.
Hi, Donald. And thanks very much for London South East for hosting today. And
it's our pleasure.
Welcome to our shareholders.
It's our pleasure.
So look, as you said, Donald, I'll try to get through this presentation in 15 minutes. So it's intentionally brief, but that will allow more time for questions. Look, just a quick orientation on myself. So I joined Greatland some 18 months ago with a deep operational background, most recently with Northern Star Resources, Australia's second largest gold miner, and before that, Sakari and Straits Resources. All of those became multi-asset, multi-billion-dollar companies, and started off as single assets, just as Greatland is today. Look, just the investment highlights overall. Look, we have an absolutely world-class asset in Havieron. It's copper and gold. I think the best gold mines have copper, and this is expanding rapidly. Our last update with the resource and reserves was a 50% or 53% increase in resources, 50% in reserves. Now 6.5 million ounces of gold equivalent, and it's still in this growth trajectory stage. It's a big beast of an ore body. And of course, our development of it gets to leverage existing infrastructure. We're just 45 kilometres down the road from the Telfer gold mine, a grand old lady of Australian assets, some 35 years of operations there. And being so close, we will be able to leverage that infrastructure for a low cost, low capex, low risk startup to Havieron. And more broadly than that, we love our position, our land holding across the Paterson there. There's no better place to look for gold and copper than where it's already been found. And this is elephant country. Big deposits have been found. Telfer, Havieron, Rio Tinto is up in the north with their Winu deposit. If we can tag another ore body, that would be an amazing opportunity for our shareholders. And then overall, we want to continue to invest in the drill bit, not just in the Paterson, but across the rest of our platform. And all of this, what we've tried to do, over the last 18 months, is really build up the operational capacity of the team, introducing resource geology, augmenting our geology, adding mining engineering and processing, together with legal and finance expertise, so that we are a good operator and good advocates for Havieron. And I always like to orientate people around our strategy. And our strategy has three key pillars. We want to continue to drive and expand Havieron and deliver that. We want to continue to invest in the drill bit. And I've talked about before building the platform to be a multi-asset, multi-billion-dollar platform. And we couldn't have a better foundation asset than Havieron to achieve that. Look, our strategy overall, I guess in this kind of brief presentation mode, I really want to talk about it just being, multifaceted around organisational and asset development, but also making ourselves a more investable proposition across the fund management spectrum. Hence, we brought out our inaugural sustainability report earlier this year, which was very well received and something that we enjoyed doing, both in terms of, I think it's important to have, but also reflects the values within the organisation. Havieron itself, it's this tremendous confluence of being world-class deposit situated in a world-class jurisdiction of Western Australia, and then also situated next to that existing infrastructure with our partner in Newcrest. And all of that leads to this quite unique development proposition that we have to bring this into rapid production, still targeting for 2024, first half of 2024 for first gold production. I mentioned before around the resource and reserves and the speed to which this is continuing to drive. And really, this resource is centred around this southeast crescent. Really strong grades. We have the 6.5 million ounces that I've spoken to. 2.9 million ounces of that is running plus 3.7 grams gold equivalent. It's a beautiful ore body, particularly when that will be the first ore we bring out to create and generate free cash flow for us to reinvest back in the mine and develop the full potential of Havieron. This slide, I really enjoy. It really shows you on the right of screen there how Havieron looked at the previous resource and what it looks like today. And you can see with that extra 10 months of drilling just how much of that ore body has come into the mine plan, has effectively been shaded blue on this. We think there's still a lot of ounces to add even on those existing levels, but also at depth, we continue to drive this out. And some of you would remember, 10 months ago, me saying with that original photo, the ore body doesn't pinch in, it doesn't cut in like that. That's just a function of drilling density. And you can see that, and I think we'll continue to see that as we expand through the ore body. But the best thing on this page is the 86% conversion rate. I haven't seen that before in my career. That just is testament to once you identify gold there, you can wrap mining shapes around it and it all comes into your mine plan, which talks to the grade and quality of this asset. This is a cracking slide, which is the ounces per vertical metre. The red line on the right of screen is what it was 10 months ago. The pink line to the right just shows it continues to get bigger. The pink line, I think the two things you notice is it's continued to shift to the right, but also extended at depth. Again, it's a function of that drill density, which is the left-hand axis. There's a huge correlation between where we've drilled and how much gold we've identified. So effectively, we feel this continues at depth, and over time, that ounces per vertical metre becomes more of a straight line on the right side. As we fill in, there's no reason why we don't get a consistency of ounces per vertical metre. So there's a lot more to add, both at depth, but also on those lateral levels. This is an important slide. I know it's a little bit busy looking at it in the ore body in plan, but effectively you can see down the bottom of screen is that southeast crescent and its extension as it continues to wrap around the ore body, that high-grade zonation. But really, 3/4 of this ore body sits outside that high-grade southeast crescent. All of that potentially comes into it. And when we talk about those bulk mines, there's potentially a couple of bulk mines here. That new Eastern Breccia, that looks, very strong. And then that Northern Breccia as well. But once you put in that infrastructure, the hurdle to bring those into block caves or some other form of bulk mining gets lower and lower, which gives us greater and greater confidence about that opportunity. But I think this just tells you about the size of the prize. And remember, at that southern end of that Eastern Breccia, we've also hit high grade. 2 from 2 drill results so far, but grade that we've only really seen in the southeast crescent. So that's exciting. Look, the cost structure, let's just talk to this briefly again, but lowest quartile. But I just want to talk to inflation for a moment. We have the advantage of a team already in place. I think Telfer is some 1,200 strong as well, in addition to the 225 at Havieron. So there's a lot of people already in situ who enjoy working at that site. And so if you're not chasing the incremental employee, I think it gives you a much more stable cost base. Our cost structure isn't developed from a spreadsheet. It's actually based on 30 years of operating experience there at Telfer. Newcrest is a credible, conservative and well-respected, global major. So I think we should have a lot of confidence in its forecast. And these, again, have been built up over the knowledge of multiple operations and 30 years experience there in the Patterson. So it should give us a lot of confidence about our ability to deliver this cost structure. The CapEx hurdle is there, but again, it's measured because we get to leverage that existing infrastructure at Telfer. And we continue to look at debt options to position ourselves well to satisfy that debt. In terms of the expansion, we continue to do a lot of growth drilling. We have that feasibility study still expected out in the fourth quarter of this year, so the December quarter of 2022. And remember, the pre-fees were set at 2 million tonnes per annum. With the preferred case for that feasibility study is 3 million tonnes per annum, so a 50% growth. The decline continues to move. Again, I've had some questions on this over the time. Going through that Permian layer, it's not homogeneous. As you get deeper, the ground becomes more competent, and that's actually better for underground mining. You can take bigger cuts, speed up your advancement rate. It's more efficient. So you would expect, and I think you've observed to date, an acceleration as we've gone through that decline development. We've talked about the potential evolution in mining. I think the southeast present on that and the sub-level open stoping continues right through the life of mine. It's a beautiful high-grade ore. You want to do paste fill and take as much of that out as you can. And then, of course, we've still got the upside of further discovery around that Havieron and around those extensions in the brecciation. Sustainability I've spoken to. I think we've spoken about Newcrest, but let's just pause on the portfolio before I hand across to Donald for questions. Really what I want to talk here is, look, Havieron is an amazing centerpiece asset, but we're excited about our exploration around the Patterson. Again, it's a wonderful address, but also the rest of the portfolio as well. We continue to look at those Tasmanian assets, perhaps looking to work something in with a partner there, because they're probably not of the size and scale, good assets, but not of the size of scale that can fit in the portfolio with a Havieron. But something like Ernst Giles, excited about. We're still just trying to solve the First Nations. We've always talked about drilling that potentially late this year, but more likely early next year. But under-drilled greenstone, Archean geology. A lot of West Australian gold is found in that kind of geological setting. Think the Super Pit. This is east of the Super Pit or east of Kalgoorlie, but we're really excited about getting drill rigs up there. It's undercover. It's exactly where we describe our competitive advantage in exploration. So with that, I think I've held to about our 15 minutes, and I'll let Donald open it up to questions.
Okay, you've done very well, Shaun. The folks on this webinar may not have seen this announcement, but you've just popped out an RNS announcement. I think the best thing for me to do is to hand it back to you and say, Shaun, could you explain to us what the RNS is all about?
Yeah, look, thanks, Donald. It is new. It's just come out kind of mid trading, but we executed an agreement with the counterparty and felt we should announce, which was timely for our catch up today. But look, this is again solving a transition issue. So when we originally acquired Havieron, which has obviously been a tremendously value accretive transaction to our shareholders, there was a deferred element of consideration. that is triggered either by a development, a decision to mine, which is around that feasibility study at the end of the year, or a reduction in our stake to 25%, which is obviously potentially the case, depending on how this 5% option plays out. Accordingly, we felt it would be good to deal with this. And effectively, what we've done is been able to bring that forward. And why I think that's to our advantage, we did two things as part of bringing it forward. One, those shares were not previously subject to any trading mechanisms. We now have a 2-year trading lock and orderly market mechanism with them. So that means those shares, don't create an overhang on our stock. So I think dealing with them in a really professional and structured way, I think protects our shareholder value. And then secondly, we negotiated a 4.5% discount, which saved us about 6.5 million Greatland shares. So I think that's a good outcome and removes another element of this transition, which I'm trying to get us past, so that we stop talking about these open elements and we're really just focused on the growth potential ahead.
And your feeling is that this was the best deal that it was possible to strike?
Yeah, look, I think given the imminent outcomes with the other things, that the timing was really sensible, and then with the combination, the bit I most love about this is the holding block. I think I've had shareholders ask me about this line, and I think this gives them and us all the protection. And obviously being able to do that and achieve a discount as well, I think it was a win-win, but I'm really satisfied with it, and I think it's in our best interest. So a good outcome, to my mind, I'm rapt to get this out.
Great. Now, it is fair to say that some of the shareholders may actually have forgotten about this, but it has been around a long time, and it wasn't something that was signed up for by you, I suspect.
Mate, it's a 2016 agreement. I to some extent, I'd love to claim credit for the Havieron acquisition, but obviously Callum led that. Callum Baxter, who we all remember, and remains a great shareholder and supporter and friend. But look, cracking deal. But just cleaning up from a corporate point of view, I think squares the circle. It's
a loose ends type thing.
Exactly, and that's when I talk about transition issues. That's exactly what how I think about it.
Great, thank you. That was very helpful. Okay, let's talk about other loose end issues. Newcrest, the 5% share stake valuation. There's lots of people asked about. Dipsard, Chris Thompson, Edward Herbert, all ask the same question, and no doubt lots of others live. So I think the first question is, give us a summary of where we're at. What position are we at currently?
Yeah, look, I've got to be a little bit measured because it's all subject to confidentiality agreements. But I think what I should say is, I don't choose the timing of the resolution of this. It's obviously got to be done pursuant to the process in the JVA and in cooperation with the two parties. That's my expectation is that gets solved shortly. It'd be lovely to have been kind of announcing that even today. But I think continue to watch this space, and I think people should have confidence that what we want to do is do our utmost to optimise that outcome within the constraints of the mechanism to protect the interest of Greatland and its shareholders.
Is it possible just to give us an overview of the process and what's taking place at the moment? Just in the most broad terms, is that allowable? And if so, would you be able to do that?
Yeah, look, we are sticklers for the confidentiality process, but I think what I can do is remind people that we entered a process. If the two parties are not within 20% of each other, it goes to an arbitrator or an adjudicator to determine the outcome. So either that can be the case, or the parties can reach an agreement. But either way, an outcome will be known.
Okay. Well done. Okay, that was a good answer. Ken McDougall. Ken is a nice chap. He always asks questions. He's keen to know about developing minds around any further strikes. He's aware that Newcrest have an optional right of first refusal on jury. But what if we've got a great asset, Scallywag or Goliath? Essentially, would there be enough money to cover that? And yeah, and would you partner with Newcrest if that were the case?
Look, thanks, Ken. So at jury, that's already in joint venture with Newcrest. Yeah. So if we had a discovery, look, my expectation is that we kind of fold in quite rapidly into effectively our Havieron development, and perhaps become a satellite ore body to that. In terms of Scallywag, that's a slightly different proposition because we hold that 100%. Look, we value the relationship with Newcrest. I think many of the reasons that Greatland entered the joint venture with Newcrest, at the time it did, are valid today. Having said that, we're a larger, group. We have better access to capital. We have a more diverse set of skills and experience within the team. So I think if we were to have a discovery there, I think it just gives us a world of options. I think, of course, we'd be talking to Newcrest about bringing that into the joint venture and working out what we get in return for bringing that into the joint venture. But equally, it does open it up to be 100% development for ourselves, which then may have some, such as a toll treating agreement with Newcrest, because there is an opportunity to collaborate at different levels. But I think having the position of strength with a stronger balance sheet, a stronger market cap, I think what I probably most want to convey is I think we would try to take such an asset further up the value curve before we dealt with it, if not taking it all the way for ourselves.
Okay, another tricky one. I'm getting all the curved balls out of the way at the top of the session. Kevin Lane and Eddie Davis both have are of the same opinion. They're not very keen on Berenberg, the broker, the house broker, and think they're not doing a terribly good job. And they, in essence, they're saying, why use them? They've not been terribly positive for Greatland Gold. What's your response to that?
So we have multiple brokers available to us. Sprott just came on with research, I think Monday, that was announced, or maybe Tuesday into the UK time. But either way, I'm wrapped to have them there. I think they show again the increasing maturity of the company and our broader interest.
Sprott are Canadian brokers, is that right?
Yeah, they are Canadian, but this is their London team. They to some extent are an international group. They have also strength on the European continent. So and they are well known in Australia as well, because they are a very well known commodity house. So look, we're really rapt to have them on, but we're equally enjoy the relationship with the existing broking group. Berenberg is one of them. To answer the question more specifically, I think they're very supportive of us. I know they're also a market maker. I think there's about 7 market makers on us. So look, I think their market making role is somewhat different to their research and support elements to it. But it's good to have a market maker. It's good that we are one of the most liquid stocks on the exchange. I think we should enjoy the benefits of that. And certainly I speak to them regularly, and they continue to assure me that they seek to maintain an orderly market.
Okay.
As with our other market makers.
Okay, so Andrew Wallace is talking about shorting. Can you please assure shareholders that you won't be entering into a funding arrangement with the same entities, brackets, or their business partners to enable the long-term shorters of the stock to buy back and exit profitably, please? He's saying don't help the shorters.
Yep. No one likes to help shorters. So yeah, I have sympathy for that. I think there is only one short. It's been there for a while. What I will say on that one is they've already sold the stock. The damage is done. At some point, that stock has to be bought back. So now we get the benefit of it. Now they choose the timing and place of that benefit for us, but that will come. So to some extent, the cup is now half full. Our job is to get that share price up and not encourage anyone else to think of doing that again.
Okay. Steve Hall, Keith Atherton, Renato Vieira. So 3 people are essentially asking the same question, which the summary would be: why is the GGP share price currently at 10p and falling, rather than I think it was at a high of 37p back in the glory days? So why, although all these good things are happening within the company and all the excellent things you talk about, why is the share price at 10 pence?
Well, look, I think firstly, our best days are ahead of us. Our asset, is getting closer to production. It continues to grow, and be de-risked. We add MPV with every month that passes as we get closer to free cash flow, and with every exploration or growth drill hole that adds ounces to the ore body. So our best days are ahead of us. I'm as disappointed as anyone with the share price, but I think we've got to look at it in terms of the market overall. Our joint venture partner, if you map us against them, the trend is extremely similar. Northern Star, which is Australia's second largest gold miner, has also had a similar trend, and it's not restricted to golds either. So look, markets are off. We are not an island. Having said that, we should be outperforming because of that growth curve that we're on. We should actually be outperforming the market, and we should be outperforming golds because we are 20% copper. The best gold mines have copper. So, that's the disappointing thing for me. I think the uncertainty around the 5%, I think any uncertainty is unhelpful. We mentioned the share issue today to 5 diggers before. That removes an uncertainty. Removing uncertainty is my priority, and I really want to switch from that defense of tidying up these loose ends, to coin your phrase before, Donald, and then move into offense, where we're talking about and celebrating just the quality of the ore body and that journey to production, not saying, hey, we're still fixing up some loose ends. So I think that's the best thing we can do. And, I think today is one milestone of progress. There's, some more coming, and then we switch to offense.
Excellent. That sounds good. Dipsard, who's a big fan and has asked 5 questions, not all of which I'm afraid we've got time for, but his questions, I'm afraid, are excellent. So I'm going to pop them in as we go. Does the technical committee still exist? And is Callum Baxter still a part of this team? And if not, how are the exploration, geological and processing teams structured currently?
So, look, the technical committee doesn't exist as a committee anymore, although just about all of them we still use in one shape or form or the other, with the exception of Callum. Look, Callum's taken a bit of a step back. I caught up with him. He came to an event with me a couple of months ago. So he's still a friend. And a supporter of our stock collectively, and indeed was through London probably a month ago and caught up with a couple of our directors. So, but look, he's always welcome in the office. He's a friendly face. Great to have him. The rest of those chaps are still actively involved to the extent that we use them to augment our team. I think the team is actually very differently structured to when Callum was there anyway. We didn't have mining engineering and processing and those skills, which we've added. So now effectively We have everyone who reports into Damien, the head of geology, which includes resource geology. And then we have Otto that leads our mining engineering team. So ultimately, they are both direct reports to me, although culturally, it's a very flat structure. We're all colleagues together. It's a small office, a tight-knit office of high-performing individuals who have been working extremely hard, really, since we got that PFS around this 5% and around these other structures to continue to delineate and understand value for our shareholders.
It may seem a bit of an obvious question, but why do you feel the need to have an enlarged structure? Why do you feel as though you need that expertise going forwards?
Well, so a great example of that, actually where I was going anyway, was when we came out with our own resource and reserve update in March. That was critical, to my mind, to the processes that are being run. That is, your fundamental understanding of the ore body is an updated resource, and then having the technical ability to wrap a mine plan around that, which generates your reserve. It, again, was essential for us to advocate the value presently there at Havieron, rather than relying on that PFS document, or at least demonstrating the growth subsequent to that and building upon it. Now, we didn't have the in-house capability of doing that prior to this. I think it's been to our great advantage that we did that. And it's shifting the paradigm around that 5% away from being, the see-through value of that PFS. Because remember, that was the milestone trigger for that 5%. And really what we've been tirelessly advocating for is that there's more to be captured, that Havieron is a bigger beast, we understand it more, and having the expertise, not just to understand the geology, but to understand the resource geology, the mining engineering, the processing, understanding the legal nature of the joint venture and also the funding of it, are all absolutely essential elements to the whole recipe of making the Greatland souffle. And we need all of those elements. You can't miss an ingredient and still have the perfect souffle.
Shaun, to me, in a way, that makes perfect sense. You're able to stick it to Newcrest in a way that you simply wouldn't have been able to previously.
That's precisely not what I said. We
true.
Enjoy the relationship.
I paraphrased,
but we do advocate our values. Thanks, Donald.
Sorry, I do apologise.
No,
I slightly misquote you there. Okay, an easy question. Well, welcome back, Shaun, says Nick Taylor. Welcome back, Shaun. I was pleased to see that we're drilling at Black Hills, famous, of course, to many of us for the numerous gold nuggets which were recovered from surface in the first few days of fieldwork back in 2018, those happy days. Can you please confirm they're still hidden away in the company safe?
They are indeed. We bring them out whenever someone gets a document out. They do get passed around the office one more time, but they're still there.
Fantastic.
Thanks, Nick.
I'm sure Nick's delighted to hear that. Okay. Yes. Steve Pratt's also asked the technical committee question. Moving on, Phil Curtis. The GGP MRE mining plan shows a stoping phase into the northern corridor. Sprott's research note also suggests this operation. In the PFS, they suggest a 3 million tonne or more operation. How do you see the mining plan developing, and what other infrastructure would be preferable, conveyor decline or hoist? There you go, Phil Curtis.
Thanks, Phil. Great question. So look, I think when I think about this ore body, I really think about it in terms of this high grade backbone being the southeast crescent. That's a single decline access. I think the most you're going to run up a single decline access is typically around that 3 million tonnes per annum. That's an efficient decline of truck movements. I think that continues right through the life of mine. Then you've got the opportunities of how you take Havieron to the next level. That's a second access. If you're going to put in a shaft, you want to have that decline in place already as part of giving yourself a platform to develop that shaft from. or a conveyor decline, equally you can come at it from both directions. So having that first piece of infrastructure in is essential. The other thing I want to just touch on there is you can then put drill platforms off them, allowing you to punch into the ore body across those lateral levels. That is more efficient, it's cheaper, and the cycle times for that information is quicker. So we'll unlock our understanding and the full potential of Havieron quicker. So having this decline infrastructure there gives you a lot of options. Now, this is a sub-vertical ore body, looks like a cylinder. It really does, I think, lend itself to a shaft or a hoist, I think Phil said. I think what you also see is Newcrest uses a conveyor dedicated decline at their Cadia mine hugely successfully. I think they move something like 30 odd million tonnes per annum there. So I think both create very efficient and effective solutions. There'll be an optimization around that, or even you just have a second truck and haul decline there, where you could, say double your throughput on the southeast crescent. But I think into my mind, ultimately, you maintain that 3 million tonne per annum southeast crescent, and then you put either a shaft or a conveyor decline, and you open up that block caving or bulk mining opportunity. And I think that Eastern Brescia, just in terms of its location, being in a place where you could bottom up mining with block caves, get right down to the bottom and tackle that Eastern Brescia. It sits out away from the southeast crescent. Perhaps that's the first cab off the rank in terms of moving to the next level. And that's hugely exciting to have that potential sitting within the ore body. Because remember, this southeast crescent is really only a fraction of this ore body. And even that southeast crescent, we're starting to get to grips with it, but we don't, there's still lots to come there. So this is where, we should be outperforming our peers. We are on a fantastic growth trajectory. And the 50% increase in resource and reserves is testament to that.
Now, in your slide pack, you had a strategy on a page slide with a 5-year view. Now, Peter's asking about that 5-year view, and he's saying, please, can you tell us, once we, let's fast forward 5 years and tell us what the company looks like then.
Yeah, look, I think, my vision is around, a very successful Havieron being the foundation asset to our company. But, I think if we do have that foundation asset in place, there is a tremendous opportunity to augment the platform. Bring in, likely 100% owned assets. So we have that expertise in-house, and we leverage that underlying free cash flow to expand the organisation. And I think this is about the benefits of diversification, and diversification can be multiple operating assets, which creates a more consistent and predictable outcome over time, but also diversification of commodity. As I've said plenty of times, I love the fact that we're gold and copper. So there's other base metals kind of in that system, which I think are really interesting to us as well, which we continue to try to work up and understand. So I think we already have a degree of diversification, but I think another asset would add to that. And ultimately, the vision is to have a multi-asset, multi-billion platform. It's financially disciplined, and I think our acquisitions or mergers or opportunities, should all be around financial discipline. But adding scale does give you greater relevance and interest in the market, including being index aware. Being in indexes where there is compulsory institutional buying is beneficial to us. And all those, I think, are levers that are ahead of us to create value.
Oh, excellent. Okay, so let me ask you, Josh Cole, so forgive me, I wasn't able to find it in time, but Josh Cole has asked quite a long and complex question, but essentially he's saying, why are you not land grabbing more of Patterson, which would fit into that 5-year plan? But what are your thoughts on that one?
Well, we are, and we continue to. So look, I think we did the Provence transaction early, which was good. We have picked up I think some new ground through the pegging system. But look, there's nothing to be announced or anything, but we continue to have conversations with people who hold land packages that we have an interest in. Now, everyone sees the potential benefit and the size of the prize up there, so no one wants to give them away. But we continue to work with them, and I think our greatest single strength in that regard is our reputation. I think we're seen as a credible, well-managed, experienced team when it comes to exploration, particularly in the Patterson and undercover. It's our competitive advantage, and I think we see that. I think we have a very disciplined approach that I've described before, where we're led by first principles. We understand, we'll drill 1 or 2 holes, understand the stratigraphy, reassess that against our modelled expectations, and then recalibrate, reassess, re-drill. It's efficient, it's high quality, it's technical driven, and I think we're respected for that. And some of that respect might be seen in the fact that we are still the manager for jury. Newcrest has had the right to take over that jury management, I think, for about 12 months now. I think it's a vote of confidence that they continue to trust us with that asset, and a number of other assets that they have been in a similar position. They've taken over the manager role even this calendar year. So it isn't something that they do lightly. I think it's a vote of confidence in us by a global major in Newcrest who are absolutely world class in this regard. But I think other organisations in that Patterson also see us as a preferred counterparty. And certainly what I would like to do is try to come up with a strategic relationship with some or one of those to unlock value for our shareholders and increase the option value in our portfolio to find the next Havieron. So it's very much in my mind. I like Ernst Giles for the same reasons. So it's a great question and certainly consistent with what I'd like to achieve. And we spend time, energy, and effort trying to achieve that.
Andrei Norfolsky asks, what proportion of debt versus equity financing do you roughly anticipate for funding capital costs of that Havieron project? So perhaps you might put the costs in context for us and then tell us the balance.
Yeah, so look, we have the debt slide in there, which adds up to about $123 US dollars. So the capex that ultimately needs to be funded. Where we are in conversations, I've mentioned before, with with bank around debt. We have a number of term sheets. We have a very high quality asset. So what does that do? That allows you to potentially add additional leverage. If I can, I will borrow 100% of that capex, through the debt process. And may I add, we're talking to Main Street banks, so branded banks that you and I know or might have bank accounts with. So highly credible tier 1 organisations. That's not to say they might not still want us to add some equity as part of getting that right debt to equity ratio there. But I'm aware of the magic of leverage in terms of delivering shareholder returns, and that's beneficial to us all. But we also want to get the right balance. We don't want to be over-levered. We don't want to be under-levered. So, and that's really something that comes to the surface or percolates through the course of a banking process. But certainly you should be confident that I understand the benefit of leverage, and I think we have an asset that lends itself to achieving that.
Ray Wood asks, will it be likely we get dividends for our shares at some point? And if so, how much per share might you envisage?
I'm a dividend kind of guy, so absolutely. I think equity has a cost, just like debt. So I think just like you pay interest on debt, it's good to have the discipline of paying a dividend on your equity. It reminds everyone that it's not free, and that it's it's precious capital that we need to respect and cherish. So, once we're in free cash flow, obviously the first call of our cash is to develop Havieron. And we want to do that. We want to get to free cash flow. We want to reinvest at least some of those cash flows back into Havieron, continue that drill, and we've talked about that bulk mine potential. That's a priority. But if there's cash available, and there should be, I'd like to introduce a dividend. And my history at Northern Star, we always used to think it distinguished ourselves as having the discipline of paying a dividend. And at Sakari, we had a huge dividend policy. That was a 65% profit payout ratio. It's certainly in my DNA to include a dividend. Love to do it, but there's a little bit of wood to chop before we get there. So I probably won't be able to tell you a cents per share today, but the better the gold price, the better the dividend.
How long, just even very roughly, might you say, before you can anticipate paying a dividend? Just very brief answer.
I think, to be open with you, Donald, it comes back to the debt proposition as well. You'd also want to, it's not too different to running a household. You want to get on top of that mortgage debt before you start, buying a Ferrari or something. But so first you want to get into free cash flow, reinvest in the mine, manage your debt down. Don't have to fully repay your debt, but have that in a really manageable position. And again, banks will have structures around that. They'll want to make sure that they feel confident of their probability of being repaid before dividends start flowing out. So there'll be hurdles to jump over to pay dividends. You're certainly a year or two after you hit commercial production, but that's not that far away for us. But I think people should have confidence that is our intent. And that we'd like to do it. And this is a world-class mine. The infrastructure is already there. The ramp up is quick. Perhaps we can surprise ourselves on the upside.
Okay. Bernard Piercy, who describes himself as a very long-term holder, his question fits very neatly into that. When can we expect first ore from Havieron to Telfer?
Well, firstly, thank you for being a long-term shareholder. In terms of that, the narrative around that is early 2024. As that decline continues to get down there, that's really the gating process. As I said, it continues to accelerate, and that's the market expectation. I think it's a fair one. So with that remains our target date.
So 2024, yeah?
Yeah, correct.
Great.
Calendar year 2024. Yep.
Okay. Inflation. You touched on inflation in your update. With rising inflation, do the board anticipate there being higher expenditure before production? Sensible question. Yeah.
Look, I wanted to talk to inflation up front just because it is something that you see talked about more and more. We've probably had super low interest rates and low inflation for what seems like 15 years. So inflation is now a relevant talking point again. So look, I think we are I think where you see the real impacts of inflation, and I guess I'm talking in the context of the Australian and particularly West Australian mining environment, is around new construction processes. There's a lot of work happening now that is competitive to get resources. There's still shipping delays around the world, and supply chains are still not really kind of at full throttle again. And there's this semiconductor ongoing kind of shortage. So what you're seeing, I think, particularly around project developments or construction, you're seeing some genuine inflationary cost pressures. One of the benefits of our joint venture, of course, is we're actually immune to that. We already have our processing plant in situ and operating at Telfer. And it's not just the processing part, the bitumen airstrip, the accommodation, store sheds, critical spares. It's 35 years of inventory is sitting in those sheds. So all of that, I think, is really beneficial. And, there's some 1,200 people in situ at Telfer. If their train B is dedicated as intended to Havieron, there's an opportunity to bring some of those people across or dedicate them on to, Havieron activity. So I think this, this joint venture structure gives us a level of immunity that you have being an incumbent producer. And then also you've got the expertise, experience and management of Newcrest sitting in there, which again, I think is the best position to be in these circumstances. So I feel really good. If there is inflationary pressures across the sector, I think we are relatively insulated from it. We're already at the bottom of the cash curve, and perhaps we outperform a lot of our peers in an inflationary environment. So I feel confident it cements and perhaps improves our position on the cash curve right down that the good pointy end of it.
If you had to filter in an inflationary figure for some elements of works and the future, what would that be? Roughly 10%, or sort of, give us some sense of what number you might be factoring in. What are you modelling?
Yeah, no, I think I haven't seen 10%, but I'm sure everyone's experiences is different, and it is. What do you chalk down to inflation and, as opposed to a cost overrun or something like that. But, to my mind, it'd be half that, without trying to put a number on it, but I haven't seen 10%. But, having said that, look, to be open with people, we've put together a really good, group of people. They have worked tremendously hard, particularly over the last 9 months. We've been running at an unusually high tempo. We do need to look after those people. And in an inflationary environment, particularly in Western Australia, where, experienced, high quality mining people are at a premium, we do need to look after those people. And, I'd like to get some more equity in their hands and align them with shareholders and say, guys, we're not necessarily going to pay you 10 times more, but have share in the prize that you create.
Okay, which it's a very roundabout way, but in a roundabout way, people are keen on you and the senior management team buying more shares. I think retail investors always see alignment with management holding shares in the company that they run. So, are there any thoughts of you and the senior team getting in, buying any more shares?
I can speak for myself. There definitely is, and I think the price is reasonably compelling. But the without commenting on share price, but I think I've answered this once before, maybe not on this platform, but people have asked these questions, and I think people also have to understand. Trading platforms are incredibly regulated these days, and there's great benefits and credit to that, but also it means that there are blackout periods where management can't buy. I'm obviously privy, and you asked me about the 5% option period before, and I said I can only be quite measured in my comments. I obviously have a much deeper understanding of that process, so I think it's fair to say that our team is probably presently in a blackout period where we could not buy stock, but that doesn't mean we don't emerge from that at some point. So we have, I guess what I'm really trying to say in summary is we have restricted periods where we can participate in the market, but I think the next when those are when they are open to us, I think there is some pent up demand.
Greg York, when do you expect the next phase of drill results on our other tenements to filter through? There you go, a nice easy one.
Yeah, well, I I'll answer it in two parts. Well, I don't think the question actually covered the first part, but look, we do have that cadence of around every 6 weeks trying to get another update on Havieron, which I think everyone appreciates. Then if I move across to our own drilling campaigns, look, assay times are still, turnaround times are still long. There were some new facilities opened in Australia which were intended and anticipated to shorten those times. Really, the sectors continue to be very strong and fill that up. But equally, it's been hard to actually get people, and you do need, some quite, good level of technical training and competency to run those facilities, to run them 24/7. My understanding is not yet being achieved. So look, there's still, very solid, plus 8 week delays on assay turnarounds. So where are we now with our drilling campaign? We started spinning a rig up there. It's an RC rig, really just getting through, putting in the collars. That's a cheaper, faster, more efficient way to get through that Permian layer. And then we're going to come in with a drill rig as a second rig to take out that diamond core. So that's kind of happening as we speak. But there will be delays as we slowly shift through, get the diamond core, and then get that out in assay form. But we do get them out quick snap. You guys know, in a reasonably short period from when we get it, once we can wrap an RNS around that. We like getting those out. We like keeping you informed.
Chris Kirk talks about spoofing. Are you familiar with spoofing as a concept, Shaun?
No, that might be an English thing.
Spoofing.
I had to tell me, what that is.
Let me run you past this, because I had to check it out just to make sure I knew exactly what it was. Spoofing is when traders place fake market orders, either buying or selling shares, and then cancel them before the order is ever fulfilled. Spoofing means that someone or something is spamming the markets with orders in an attempt to move share prices. Chris Kirk's question relates to that, and it says that happens in terms of day trades, and he's cross about it. And he thinks that you, as the managing director of GGP, ought to understand that that's happening and get involved with sorting it out. Do you have a point of view on that?
Look, an orderly market's incredibly important to us. I have had discussions with the Nomad around, just making sure that, we both feel confident. But the London markets are, incredibly sophisticated and, world-class and respected universally. So I think we all should have a level of confidence and comfort. I think one of the lovely things about us is our liquidity. This is not a stock that, one trade can necessarily move it over time. So I think, and multiple market makers. So I think we have some level of insulation. I will, make some due inquiries around this, but I also think that we're very lucky to have such a liquid, well-known and well-traded stock. And, that does, it certainly gives me a level of confidence in it.
But I suppose being big, well-traded stock comes with its downsides as well. You attract all sorts, shorting, you attract spoofing. That's the problem about being a major player. You have the same problems that other people have.
Yeah, look, and I think some of those things are universal, whether you're BP or anything in between. But having said that, I think the London Stock Exchange is one of, if not the premier kind of platform on the planet, for a reason, and it's an exchange we should all be very proud of.
Great. Okay, Edward Kennedy, perhaps potentially the last one. Do GGP believe there's 20 million ounces of gold at Havieron? And if so, why hasn't MCM Newcrest confirmed this? And will they confirm this year or next year?
Well, look, I think a little bit like you saw with the our update to the resource and reserve. This is our prize asset. We are probably, it's more relevant to us. It's more important to us. It's a focus for us. Newcrest will, move in a very, professional, measured and sophisticated way, and they're a great organisation. But I think there's also an opportunity for us to be advocates for our own asset. And again, there's we've probably talked about the team a couple of times, but this is why we've built the team. So we can understand our asset, so we can advocate the asset, and we can choose the time and the place of how it's described in the market. And I think that gives us a huge amount of capacity to describe to the asset and be in control of our own destiny to some degree. So look, I think when you look at the ore body itself, and I've talked about that kind of cylinder shape, I think when you do some basic, volumetric measures of that in grade zonations, you do get this very big number. And the analogy I'll give is Telfer is a 20 million ounce ore body. It's taken them 35 years to mine about 13 million of those ounces. Now, that doesn't mean you ever take all 20 million ounces out of an ore body. At some point, the grade curve goes low, and it's not super economic to take out those ounces. And that will be the same for Havieron. You rarely take every single ounce there. They fall out of economics. They fall out of mine plans. But having said that, it is a Telfer scale ore body. We're already at 6.5 million ounces of good grade material. I referenced the 13 million ounces at Telfer that's been mined. Certainly this early on, since the discovery of the ore body, I've already mentioned our last update, we're at 50%. We're still in this high growth trajectory period. It's not a huge stretch to the imagination to seeing this these number of ounces of good grade ounces, of potentially mined ounces, continuing to grow tremendously strongly. It's subject to exploration success. It's subject to all these ongoing vagaries. But to date, it's been a wonderfully consistent, high grade, good quality ore body. And then as we get to understand that Northern Brescia and Eastern Brescia better, we have the opportunity to add. We have the gap zone sitting in between the Eastern Brescia and the Southeast Crescent. That's a wonderful place to put some drill holes through. There's lots of opportunity there. It remains open at depth, and a huge opportunity to continue to add ounces through the lateral levels of that ore body. It's a beast. It's a really good quality ore body. We should celebrate what we have.
Any discussions about move from AIM to FTSE? Says John Stone.
Look, it's an interesting question. I did talk about being index aware as well before, and I think that is part of that equation. So yes is the answer. As part of that, we will consider a couple of different exchanges. FTSE, I think we should consider ASX, where we are an Australian asset. A lot of our peers are there, but I think if we did something like that, it'd be cross-listed. Keep all the benefits we've got here in London, but augment it by bringing in some additional Australian demand, and/or movement to the FTSE. Again, get the indexes in Australia. Again, both are world-class platforms, but obviously the FTSE is the premium listing.
Okay, and two people ask about the Sprott release, which was that yesterday. They say that there's a valuation of 17p by Sprott. George Zoros asks about that. Somebody else as well. So that's two people asking about Sprott. What are your thoughts on that?
Look, well, firstly, brilliant to have Sprott on board there. They but equally, really love the relationship with the existing group of brokers. So we don't want to just focus on the shiny new toy. We want to appreciate what we have already there. They all do a great job, and we have strong relationships across. But let's talk to Sprott for a moment. Their research is on a slightly different basis to the existing research, and what I mean by that, they are anticipating our holding is 25%, not 30% in the ore body. So you probably want to recalibrate that share price based on that potential outcome. And we don't know what that outcome is yet. But I understand why they've made that decision. We think Havieron is a world-class prize. Presumably, Newcrest covets more of it. So good to have them on board. I think it's supportive. It's recalibrated in this market, but they are advocates for us. It opens doors to new fund managers, a strength in North America as well. I think this is really advantageous to us as a company and as a group of shareholders. So thrilled to have them on board. And I think it's a good research piece if for those that want to get the opportunity to have a read.
Gillian Edwards asks, what was the Nomad's outcome on your previous inquiry? Now, I don't really know anything about this, so you tell me if this makes any sense to you. Gillian Edwards, what was the Nomad's outcome on your previous inquiry?
I wonder if this is a new question and she picked up a response before, but where I think I just talked about orderly market. Look, I think it's right for me if someone raises a question to socialise that or to raise it with the Nomad, and they are effectively uploaded into the regulator. And people, should have confidence that, we take an orderly market very seriously. But again, I think the LSE is a wonderful platform, and we should be very grateful that we do have this incredibly sophisticated, long-standing, and well-respected London Stock Exchange platform here.
Okay, final question. Grade consistency. Question from Josh Cole. Could you give a little detail on grade consistency across the Havieron deposit? Is it homologous? Is homologous a word, or does it pinch and swell? Over to you.
No, particularly down that southeast crescent, we see this lovely consistency of grade, and the southeast crescent is kind of where we expect it to be. And even when is it 144, I think that we dropped in about 250, 300 metres underneath the existing resource. Again, like clockwork, we hit southeast crescent with a consistent grade. So that gives us a lot of confidence as to its ongoing continuity. That drill hole was previously announced. Look, I when I was saying that, I was specifically referencing the southeast crescent, but also the broader kind of lower grade, if you will, brecciations across that northern breccia and the eastern breccia are strong. Again, we're getting 200-metre intercepts of mineralisation. They're really good. And I think that high-grade southeast crescent, that high-grade intercepts on the south of the eastern breccia certainly warrant following up. We're really keen to understand how that continues to evolve and what can be there, because high-grade areas are lovely. You prioritise, you pull them out quicker, you generate free cash flow, establish your infrastructure, and then once that infrastructure is in place, the threshold or the hurdle rate for bringing in additional ore is obviously lower. So that's one of the magic things about it. You were designing an underground ore body from scratch. You would put a big high-grade backbone to it. You would make it subvertical, and you'd put this lovely, clean delineation so you can put your infrastructure outside of the ore. Look, this is a nice underground ore body. It's made to be mined.
And there we are. That's it. And I would just like to say a huge thanks to Shaun Day, because he's been fantastic. He's stuck at it and answered all your questions as best he can. And we've asked him some pretty difficult curved balls. So thank you very much indeed to Shaun. That's as many questions as I've ever seen asked. And we've got so many of them answered. So thank you, Shaun, and thank you all.